We are continuing now with fixed assets. It is all part of lesson of week one's work. And if you remember correctly, in term one in grade 11, we did the disposal of fixed assets. If you did not have accounting or can't remember all that, please let me know and I can give you the notes of the grade 11s as well. So in the fixed assets, golly, Miss Molly, we have a look at, we will make an informed decisions on the outcome of the movement of our fixed assets, as well as determine the age of an asset, determine the lifespan of an asset, interpret on the asset disposal process, report on an asset disposal, and calculate how often an asset needs to be replaced. Know what the gap principles are for in regards to fixed assets, as well as the ethical issues, and understand also internal audit and control. I work out of the Study and Master textbook, chapter 7. Okay, so if we look at the introduction here, we see that in grade 11 we learned the fixed assets are, we bought it in order to generate an income for the business, and usually that will be either our land and buildings or vehicles, machinery, office furniture and equipment. Land and buildings, they do not have any depreciation on them, as you can remember, and we will always, when we record a transaction or record in our notes our land and buildings, our vehicles and equipment, it will always be at the historical cost, if you remember that correctly. So there are many uses that we have for our fixed assets, and if we look at it can be to assist in production of goods when we do have printing machines, sewing machines, assist in administration, computers will do that, and also printers. Making shopping convenient for customers, the shop's shelves as well as the tills at the supermarket will do that. To speed up operating processes, that is delivery vehicles and delivering stock to your customers to give an extra service to them. There's just some keyword. Acquisition is then the act of adding to a collection. Procurement is the process of getting your supplies and procedures that followed when you have to acquire any fixed asset. And then that GARP principle is your historical cost principle. So everything will be recorded at historical cost, the cost that you pay for the asset when you bought it. So a business will buy an asset after it is established the need for the asset. There will be a proper acquisition as well as procurement process. Not anybody in a business can decide, oh, we need a printer and go and buy that. There will be a whole process to see, is it necessary, put in some quotations before anything is bought, as well as the procurement policies that needs to be followed and completed. Once we have gone through the whole procedure, the item is bought, and when it arrives at the business premises, you have to enter it into the book as follows. So how will it be entered? We see here the transaction over here. There's a source document, your general ledger, and also the accounting equation. So we bought a vehicle on credit. That means your source document will be your invoice. In the general ledger, you bought a vehicle, so you will debit your vehicles and you will credit your creditors control. The accounting equation is the assets will increase and the liabilities will also increase because you bought it on credit. So we bought equipment on cash. if you bought it with a check, your source document will be the check counterfoil. We will debit our equipment and we will credit our bank. And the accounting equation is your assets increased with the equipment, but it decreased also your assets because money left the bank. Land and buildings purchased and a mortgage bond taken out against the purchase price. So there's a transferred deed. We debit our land and buildings and we credit the mortgage bond. So our assets increased and our liabilities increased. The owner of a closed corporation gave a delivery vehicle as part of its capital contribution. That would be a journal voucher. Our vehicles will be debited and capital will be credited because the owner contributed the vehicle, and that is seen as capital. So our assets will increase and the owner's equity will increase as well. We have to remember here that the cost price of the asset will include a variety of expenses, and it is will then be determined. So your cost price will be your purchase price plus the direct cost. What is the direct cost? That are any costs that attributed to bringing the asset into the workable state. That can include your transport cost, your delivery cost or handling cost, that you also even your installation cost. So if you bought some machinery, you have to know it must be delivered, so that is the direct cost. If the machinery have to be implemented and installed, that would be also a direct cost that you have to remember there. There's activity 7.1. You can go exactly as we did the previous one. Remember, if you do an activity, go back to the information that we just did. And do it correctly from the beginning. So that will help you to understand and to practice your work properly. So in this, you can do the activity and discuss it then also in your life lesson. When we are working with your fixed assets, it's also important that internal auditing of the fixed assets are done, and your fixed assets must be properly recorded and monitored and be also regularly audited. And the audit process must then include here that check the mileage traveled on each vehicle, check the vehicle are in proper working condition, check that they are being used for the purpose in which they were bought for, check the computers and the machines are in working order, ensure that the fixed asset register is properly updated, perform a physical stock take count on the fixed assets. These are in the exam, we can ask you what will be the internal control measures that can be implemented to see that there is control over the assets. Then this will be the answers from here that you will be given for questions like that. Okay, so after an audit is done, the audit will see if everything is then in place, and the business should fix then any broken assets or get rid of any redundant ones. They must also see if there's any fraud that happened and also fix that. So the proper use of fixed assets is acquisition or purchase of a fixed asset results usually in a huge cash outflow for the business if they pay cash, or they can pay it on taking out a loan or on credit, paying it off in the end. So we have to have certain control measures that must be in place. So there must be proper authorization and approvals is needed before you purchase any stock. Fixed assets must be secured against theft and misuse. Just to get back, the previous was the audit process, that what is checked there, and this is the internal control. I jumped ahead with that. So before a fixed asset is bought, the proper authorization and permission must be obtained. Proper record of the asset must be kept. Stock take of the assets should be done regularly. Proper checks and audits of fixed assets must be done. Stolen, lost, and damaged or destroyed assets must be reported immediately. Depreciation policies must be established, and they should be have maintenance plan on the assets. Activity 7.2, there's not a lot of activities in the fixed assets, so the activities is in between that. You can just check yourself if you do understand. This is a nice one to see what is done here. Depreciation or let's take number 4, assets which are bought for the purpose of generating an income. That can be your equipment or even vehicles, so you can have a look at that. There's number 4 part of the activity. Okay, any fixed asset that we bought has a certain lifespan. That would be especially on vehicles, equipment, machinery, and things like that. So that means that when machinery or a vehicle, there is more maintenance done on it, and it's standing all the time, and the reparation costs are getting more and more each week, then we know the lifespan of that fixed asset are at the end almost. So we see that because fixed assets work in generating an income for the business, they will have wear and tear, and they break and become outdated. Computers, we know they become outdated every few years, and you have to buy new computers as well, so, in that regard. So the business can therefore not keep an fixed asset forever. A building is different because they are increasing in value where assets are decreasing in value. There is some key words that you can have a look at there. So the lifespan of a new fixed asset is when we have a new fixed asset, the following is considered when determining the lifespan. So a business must determine, this is the things we are looking at, and this is the lifespan of our fixed asset. So we have to go and have a look at how long will the particular asset be economically useful. An example is a vehicle are being replaced when the service warranty expires, because when they have a service warrant, the company don't have to pay for all the services. So the moment that expires, they can say, okay, we are replacing it with a new one. How efficient is machinery in producing items? For example, machines are replaced after they have produced a certain number of garments, because more technological advances ones are available. Technologically advanced ones are available. Okay, so machines even that are producing garments can get more advanced at some stage. So there is a formula that we determine the lifespan of new fixed assets, because it all depends on the nature of the business. So there is no set formula. Each business have to decide what they are going to do to determine the lifespan of their fixed asset. Let's look at an example here. So to determine the useful life of a fixed asset, that is based on the following information. We have our cost price is 320,000. Then we have our accumulated depreciation is 192,000. So the carrying value of the fixed asset is then 128,000. So the depreciation on the above asset is 64,000. That is 20% per year on the cost price. What will we do? And the solution is we use the following formula to work out the useful lifespan of a fixed asset. We take the cost price and the depreciation, and then we will see how many years the lifespan will be. So in this instance, we take the cost price is 320,000 and the depreciation is 64,000, and we see the lifespan of that fixed asset is 5 years. So the age of a fixed asset, according to the historical cost principle, when a fixed asset is bought, it is recorded and remains in the books at the original cost price. And each year that fixed asset, we depreciate it, and the accumulated depreciation reduces the value of that fixed asset. So here is our formula. We have the carrying value of the fixed asset. That is the cost price minus the accumulated depreciation. And here's an example of that. We determine the age of an existing fixed asset by, we have the cost price of the fixed asset, the 320, and the accumulated depreciation 192,000, and the carrying value is then 128,000. Remember, the depreciation is 64,000. So we use then the following formula to see what is the age of an existing fixed asset. We take the accumulated depreciation, that is 192 there, and we divide it by depreciation. And that gives you 3 years. That is the age of a fixed asset. So the first one that we did was the lifespan, that you take the cost price divided by the depreciation, and this is the age of the fixed assets. And now we have the replacement rate of a fixed asset. So we have to replace our fixed asset from time to time, and that means we can you remember from grade 11, the disposal of our assets. We can either we can sell the asset that we want to dispose of and replace it with a new one. So we can either sell it for cash or on credit to somebody, and we will then there's a value to any old fixed asset, and the value of the old fixed asset is then set against the price of the new one. When a fixed asset needs to be replaced, the following formula can be used. So we have the replacement rate here, and that is the cost price of the new fixed asset minus the carrying value of the old fixed asset. So let me just go back to that. When a fixed asset needs to be replaced, okay, so because there's a value in the old fixed asset, the value of the old fixed asset is set off against the price of the new one. So that is the replacement rate that we are doing right now. So we have the cost price again, 320,000, the accumulated depreciation 192,000, and the carrying value is then 128,000. The business decides to replace the above fixed asset with a new one because the maintenance on the old fixed asset are too expensive, and the new asset will cost 500,000. So what will they do? They will take they will use the replacement rate will then be the cost price of the new asset minus the carrying value of the old one, and that is 500,000 minus the carrying value 128,000. So the replacement rate is then 372,000. Also quite a lot of theory in here. The last part that we will be looking at is your net oh my goodness, sorry about that. The NRV, the net realizable value. Disable. Sorry, I think my mind is now wandering to other places. So the NRV is the prudence principle. That is a conservative approach when we are valuing our assets. So that is very important to remember, that we must always be conservative in recording when we value our assets. So the NRV value of the fixed asset is the value that the business would receive for a fixed asset if they are to sell it, less any expenses that incur in selling it. We can therefore say that it is a cash amount that the fixed asset would be converted into once it is sold. If the business discloses the NRV in their financial records, it would be conservative estimate in line with the GAAP principle. So we must also remember that, however, in the case of land and buildings, where the market value could be higher than the historical cost, that can happen quite a lot, especially when it was a good investment. The business will have to motivate why it would want to revalue the land and the buildings it owns. The conservative approach would be to revalue it to a lower than the market value, because the market value might not be realized if it was sold. So the market could drop a bit, and then it is not it's not realistic. So we must always be conservative. For example, if a building was bought for 500,000 and a few years ago the market value of that building was 1.8 million, but the revalue of that building in the end was 1 million. So we must always be conservative in that matter. There is an activity that you can do. So the disposal of fixed assets, we did that in grade 11. And when we saw that we do not need any more any of equipment or a vehicle, the business have to replace that. So machines, computers often need to be replaced or upgraded because of technology, and vehicles often have to be replaced because of the wear and tear, and that can be very expensive to maintain, so they have to get rid of them. So when it happens, the business will sell the old assets and we replace them then with new ones. So this is your asset disposal that we did in grade 11. And we will do a more analyze and interpret the asset disposal process. So here's a summary of it. We see here that the asset sold for cash, sold an old computer for 1,500 Rand cash, and the original cost price was 6,000 and the depreciation was 5,000. So we will debit our asset disposal account. We will credit our equipment account with the 6,000 Rand, the original value. And then we will debit our accumulated depreciation account, and we will credit our asset disposal with the 5,000 Rand. There we see the depreciation was 5,000. We will then debit our bank, and we will credit our asset disposal account with the 1,500 Rand that we got for the computer. So we take the 6,000 minus the 5,000, so that's the original value minus the depreciation, and the carrying value is then 1,000 Rand. We sold it for 1,500, so we made a profit of 500. The asset disposal account is debited, and we credit the profit on sale account of an asset with 500. When we sell an asset on credit, so we sold industrial sewing machine for 8,000 Rand. The original cost price was 20,000 and the depreciation was 10,200. We will debit our asset disposal, credit our equipment account with 20,000, the original cost. We debit our accumulated depreciation on equipment account. We credit our asset disposal, and with the 10,200, that was the total depreciation. And then we sold it on credit to the people, so we debit our debitors control. We credit our asset disposal with the 8,000 Rand that we sold it for. We see here the original cost was 20,000. The depreciation were 10,200 and the carrying value is 9,800. So we made a loss of 1,800. We debit our loss on sale, and we credit our asset disposal with 1,800. So when we trade something in, that's another important part to remember. We traded in an old truck which originally cost 120,000 for. So the accumulated depreciation was 78,000, and so we are trading it in for a new truck. We debit our asset disposal account. We credit our vehicles with 120,000. We debit our accumulated depreciation on vehicles and credit our asset disposal with a 78,000 rand. And then we will debit our creditors control, and we will debit our creditors control and credit our asset disposal with the 42,000, and we get that from the 120 cost minus the depreciation of 78,000, and that is our carrying value. Then we analyze interpreting a fixed asset register. So all the information concerning fixed assets purchased by the business must be kept in our fixed asset register, and this register must be updated annually when every asset has been depreciated. Okay, so that was our fixed assets. There is some activities that you can do and check yourself if you understand the work, as well as yes. So I don't. Oh, I thought there was a case study. Sorry, that was from another one. Okay, so there's some activities. Please go through it. It is quite a long 3 lessons. So for the first week, what we should have done is then ethics. Ethics was quite a lot of theory-based work. You can just read through that and know everything. And please go through your fixed assets and do the activities. And then we will see you in the next lesson.